Time now for Options Corner. Joining us for a deep dive into this chart is Rick Ducat, lead market technician. Salesforce had a difficult year. Shares on the move in the pre-market, Rick.
The whole software sector has had a difficult year with the exception of a few standouts here. When we look at our Salesforce chart, as you said, down almost 19% during the past year versus the 24% gains enjoyed by the broader tech sector. But, software is a tricky one here because you have these very outsized gainers like Palantir and AppLovin and Oracle, and all the rest of them are mostly down in the dumps here. This is a sector that's being severely disrupted by AI and all manner of things happening with the trade war. So a difficult situation for most of the companies in this field. But as we look more closely at our chart here, we can see that trending downward in a descending triangle type shape here. We have a range bound period between about 230 to the downside and 255 to the upside. You can see that was an old low point here, and then it became the high point several more times. Similarly to the downside, old low point here and then subsequent low point. So that's a general downside area to be watching out for as we move forward here. But what the bulls would hope for would be a push above that trend line and a push above that 255 level here. So when we also consider our volume profile and standard deviation channel studies, we can see that the point of control, the area of heaviest trading, comes in right around 242. So that also lines up very closely with our 21-day exponential moving average. So significant resistance point to clear for the bulls if they do hope to take out those highs near 255. Volume picks up once again here near about 265. Momentum, RSI, not really providing too much of a lean one way or the other, but more toward the bearish end here. When we also look at our expected move here, about a roughly 10% move plus or minus here during the next 36 days is what the options market is looking at right now. The lower end lines up pretty closely with that 230 area, right around 227 or so. So that would be one downside area to watch out for. 277 is the upper boundary here. That would be the upside.
All right. Thank you, Rick. Now to take us through an example trade, we've got Tom White, senior options contributor and co-host of Fast Market. Tom, what's the approach for an example trade for Salesforce? Yes, has some momentum in the pre-market, but it's been a difficult year for this one.
Yeah, it's been a difficult year for a lot of these software stocks, but the update maybe brightens the outlook here. Now, one of the things you got to remember is they don't report earnings until early December on the 2nd. So we want to avoid that earnings event. So I looked at a strategy. If you think this stock's going to finally get some momentum, I mean, as of yesterday's close, this stock was down 29% in 2025. So making a nice pop here, back above $250 a share in the pre-market. So I looked at something pretty straightforward, but offsetting some of the costs and risks on this bullish position. So we're now to the November 28th weekly cycle. So 43 days to expiration gives me plenty of duration, but at the same time, it avoids that earnings event on the 2nd in case we see a pullback. Anything can happen during earnings. We're going to buy the slightly in the money 250 call. The stock is looking like it's going to open up about 252 here. Keeps on moving higher in the pre-market. Buy that 250 call, and then against it, we're going to sell the 280 strike call. $30 wide, bullish call vertical to the upside. You're going to pay roughly about a $10 debit if the stock opens up just above 250. That's going to be your risk, about $1,000 per spread. That can expand to $30 if we get above that 280 level. Now, the break even on this, if you pay a $10 debit, is you add that to the 250 strike. Your break even to the upside where you need it to go above, about $260. That's just about 3.3% above the current share price where it's going to open up about 252. So you don't need a big monster move. Now, if you're thinking, why are you selling the 280 strike against the long 250 call that's bullish? Well, you need about an 11% move from the current share price to get above that 280 strike. You've got 43 days. The risk-reward setup's pretty good on this one, risking $10 to make $20. So that sets up nicely. You don't need a big monster move to the upside. But if you think it's going to continue to grind higher, get back towards that 280 level or a higher, that's going to be what you want on this type of position.
All right. Thank you, Tom. Appreciate that example trade there on Salesforce.